Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Allcargo Group is in focus on the back of its restructuring process, the recent capacity expansion in the group companies, and a lot more as well. To discuss this, we are now joined by Ravi, the Director of Strategy and Group CFO of the group, joining in now. Mr. Jakhar, good morning. Thank you for joining in. Well, there have been a lot of updates with the group recently, but let me first speak to you about the capacity build-up and setting up of new container freight stations or ICDs as well. What kind of capacity expansion are you planning? What is the Capex that you'll be putting in? And how will you fund that?
It's a pleasure to be on your show. Let me start with the Allcargo Terminals business. That's where we have all our container freight stations and ICDs. So primarily in that business, we are the largest CFS operator in the country, and the business has been doing good. We've been running close to full capacity across facilities across the country. What we intend to do is we intend to add capacity in JNPT, in Chennai, and we have been speaking about an ICD in North, which is also now progressing well. The land acquisition part, which is in a group company, has been going on well too, and we would be in a position to start developments on that property within this year. So we believe that we can set up a couple of new CFSs and the ICD. In terms of funding, we believe there are multiple opportunities. To begin with, the board has recently approved an issuance of preferential allotment to the promoter group, which has been concluded and is now will be subject to the shareholders' approval. We would evaluate other opportunities for fundraise, but in that business, it's a very strong operating cash flow generating business. So we believe internal accruals will also pave way for the growth required in the coming years. But we see there's a strong opportunity for us to grow because with the addition of new facilities and new capacities, our constraints on growth will be removed and we can continue to outgrow the market on the CFS side. On the ICD side, it's almost like a new product for us. While we have a CFS in the Container Corporation joint venture that we have in Dadri, this would be a much larger standalone ICD that we're developing in NCR in the heart of NCR industrial area. So we expect that it would still take about a couple of years to fully operationalize, but that's the long lead development in terms of setting up infrastructure and all the approvals, etc. But these are the key plans to expand capacity on both CFS and on the ICD side as well.
So you will be expanding capacity, but what will the Capex number be?
So it would be a combination of asset light and asset heavy in the sense that, we would try to get into some of the operating leases. Like in JNPT, we are looking at expanding capacity by almost 30% with the addition of new facility, but that will be on an asset light model. In Chennai, we are evaluating both models right now. In ICD, there'll be some Capex required. So we estimate that the total Capex requirement over the next 3 years could range anywhere from about 150-200 crores to about 350-400 crores, depending on the final dynamics of our strategy, whether we go asset light or asset heavy, because both options exist. But it would be a reasonable investment in terms of capacity and in terms of Capex also from the company's standpoint on Allcargo Terminals.
What will this mean for Allcargo Terminals' overall top line? I mean, you ended last year with a top line of about 750 crore rupees, and I think in Q4 there was a loss also. With so much Capex coming on stream, in 3 years, what do you think your top line would look like, and what would it do to your margins? I mean, what's the big picture here?
Yeah, so I would say, with the new capacity addition, we believe that over the next 3 to 4 years, there should be an opportunity for the company to grow in the range of 15 to 20% kind of a compounded annual growth rate. That's the broad target around which it is being planned. And in terms of return on capital employed as well as for the new projects, these are all significantly higher than our weighted average cost of capital. So these all will be financially value accretive from that standpoint. And speaking of the performance on the operating cash flows, the operating cash flows have remained positive for last several quarters. There could have been, one-off depreciation line items that you were possibly referring to on goodwill depreciation or around the brand, etc., on some past acquisitions, which potentially leads to, a decline on the bottom line. But from a business standpoint, the operating cash flows have remained steady and consistently positive over the last many quarters and would continue to remain positive and also grow from here on, because we don't see any negative, headwinds for the business.
Ravi, good morning. Thank you for joining in. You mentioned about Allcargo Terminals, shifting to the logistics business then. Well, how has the quarter been? If you could tell us that first, the quarter that just ended in June. What are the trends that you are currently witnessing? And based on those trends, what are the kind of volumes that you're likely to deliver both on the full container load and the less than container load businesses for the full financial year? If you could share a number on that front.
Yeah. Like always, we'll have to refrain from material guidance on the numbers, but I can give you a flavor. We have been updating the numbers on a monthly basis. The June quarter has remained subdued on the international business. We have not seen any momentum until the June quarter. It is also very customary for May and June months to be low, and typically it's the month of July from which the trade pickup happens globally. This time, while there was a bit of a confusion around the tariffs and that led to a volatility within the months of April and May, now that we are into almost third week of July, we are seeing the momentum come in on the international trade like every year. And we believe that going by the trends of the first 3 weeks, what we have seen, and also some of the inquiries into the next couple of months, we believe we should see some momentum in terms of the international trade picking up over the next 3 to 4 months, which is the shipping cycle. On the domestic side, again, we have seen volumes picking up ahead of the festive season. So I would say April to June quarter, subdued on both domestic and the international business, and a good momentum from July onwards.
Got it. Thank you so much, Mr. Jakhar, for joining in and telling us what's happening with the group overall. That's the word coming in from Allcargo Group. With that, we'll quickly take a look at what the markets are doing.